Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is July 22nd, 2025, and today on our call, we have Adam Zaghloul from NTG Clarity Network. NTG trades on the TSX Venture Exchange under the symbol NCI, and it also trades on the OTC under NYWKF. The company is currently trading at $2.09 with about 43 million shares outstanding, or about a $90 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, Trevor, thanks a lot. Adam, great to have you here. NTG is a company that I personally have been following for many, many, many years. Great to get you up here so we can, get reacquainted, so to speak, and more importantly, have everybody, listen to what the company's all about. So obviously, I've got a presentation in front of us here. Why don't I just hand it over to you and let you go?
That sounds great. Let's get started. Thanks very much, Paul and Trevor, for having me on. It's really a great opportunity to get in front of you guys and talk about our story. So to get started, NTG is, I would describe us as an IT services company, but we have a special focus on the growing IT and technology sector, specifically in the Middle East, in Saudi Arabia, where the majority of our revenue comes from. So I'll take us through the story now. Right off the bat, when I say Saudi Arabia, at least historically, a lot of the impression that people get from that is this sort of image right here. Maybe it's a little oil dependent, maybe an emerging economy out in the desert, maybe not necessarily very much else going on. But in reality, Saudi Arabia has been taking its oil wealth and making investments into technology, finance, sports and entertainment, tourism, basically wanting to diversify itself away from the oil and gas sector and towards being more of a diverse 21st century economy. There's $1.3 trillion of investment earmarked for what they're billing as this Vision 2030 economic development plan to really drive that economic diversification. And a key pillar in that is software development, digital transformation, and that's where NTG Clarity comes in. So NTG Clarity has been active in the Saudi market for more than 20 years now. It's also the same amount of time we've been listed on the TSX Venture. We think we're offering Canadian and North American investors a pretty unique opportunity to get exposure to the technology space in the Middle East. But with that long experience in Saudi Arabia, we've been able to sort of start offering a niche offering in the Saudi market. And as the investments have started to hit the road in the region in recent years, we've been able to grow along with the growing economy. So I mentioned we're focused in Saudi Arabia. 95% of our revenue comes from there. We've been growing with the economy. Our 3-year compounded annual growth rate for revenue is in excess of 60%. And that's letting us post a pretty strong target revenue for 2025 of about 78 million Canadian dollars. All the finances will be in Canadian dollars in this presentation. But if I were to summarize our business, I'd say that we really build the software development and engineering teams that help deliver end-to-end software development solutions that is digitizing the Saudi Arabian market right now. Our customers are all enterprise level, blue chip, telecom operators, financial institutions, system integrators who service the government sector there as well. So really these large enterprise Saudi clients. I would say what makes NTG different is primarily our talent pool being based out of Egypt, just across the Red Sea here from Saudi Arabia. You can think of us as a software development or technology outsource or offshore firm. But most of the time when you think about offshore, you'll think about destinations like maybe India or Pakistan or the Philippines or places like that. You'll also probably think about, cost savings and cost effectiveness. When we're talking about offshoring to Egypt, targeting the Saudi Arabian market, you still get those cost savings that you'd expect from offshoring. Sometimes it can be 50% cost savings when compared to hiring locally on site in Saudi Arabia. But when we're talking about the Saudi market, Egypt ticks a lot of maybe operational and cultural fit boxes that maybe those other destinations don't. Egyptians, they'll speak Arabic, they'll work in the same time zone as Saudi Arabia. They'll share a general cultural background to our Saudi clients. So it really makes for better collaboration, really like working with your neighbor from that perspective as well. I'll get into our main lines of business. I like to break down and think about our business in two categories. The first is our software development, digital transformation, software development services, which makes up about 94% of our revenue as of the end of 2024. But the remainder of our revenue, it comes from our own line of proprietary software products as well. So we'll talk a little bit about that too. But the first bin, these digital transformation services, basically the case here is that our customers have these digital transformation roadmaps, right? They want to diversify their operations, digitize all of their processes, and they need the software development staff to be able to do that. But the problem being the tech talent scene, especially in Saudi Arabia, is still pretty young and on the up. So when they need resources like front-end developers, back-end developers, solution architects, even the ancillary staff like project managers, business analysts, basically anybody that you need for software development, they need to look for companies like NTG who can supply the resources. So we will engage with our customers, typically anywhere from 1 year to 3 year engagements, and bill them monthly based on the number of resources that we're placing with them. Now, the work itself can be done either offshore or on site. Offshore is definitely the hot offering that we're offering right now. This is the case where we have resources based and working out of Egypt remotely for our customers in Saudi Arabia. We just started offering this back in 2021, and since then, by the end of 2024, it was about 35% of our revenue, and really in Q1 2025, it became 50% of our revenue, so the largest part of our offering. So the customers are really liking this offshore model. Has all those cultural benefits that I mentioned, language, time zone, culture, has that up to 50% cost savings. You still get the quality engineering resources that you're looking for. So our customers are really liking the offshore service. But that being said, on-site is still preferred by a decent number of our customers. So the cases where they want people, boots on the ground, working in office every day. So we'll most of the time handle relocation, work permits to get Egyptian resources over to work in Saudi Arabia as well, if that's what the clients want. So together, those services make up, as of the end of 24, about 94% of our revenue. The other 6% comes from our own line of proprietary software products. NTG Apps is our flagship product, and I always like to talk about this because it's another fast-growing part of our business. I like to think of NTG Apps, if you're familiar with the no-code, low-code paradigm, it's similar to that. You can roll out software without needing any actual developers by using drag-and-drop workflow builders, drag-and-drop UI builders, that kind of thing. But it really helps roll out apps for all sorts of use cases for our customers. We've rolled it out as a full-scale enterprise resource planning platform for small and medium-sized businesses. We've rolled it out in larger enterprises as IT trouble ticketing, or for our telecom customers, a field service management or network inventory management platform as well, fully integratable with the other software that they're using. And it really saves development time, development money, and gets them software that they need as soon as possible. So in 2024, our team did a really good job of piloting NTG Apps with a lot of our customers. By the end of the year, about half, 47% of our customers were at least running a pilot for NTG Apps. And in 2025, we're seeing a decent number of those pilot projects turn into full projects, with NTG Apps seeing year-over-year growth as of Q1 2025 of about 150%, so growing faster than the business as a whole. So we're really excited over the long term for NTG Apps to bring some revenue growth, but also some potential margin expansion as well, because software projects like NTG Apps these days have gross margins in the range of about 50%. And that's definitely better than the services gross margins that are typically in the range of 35 to 40% as well. So I want to talk about, NTG's advantage, our 3 steps to success. I can call them why we're winning a lot of the business and growing like we are, especially in Saudi Arabia. I think it boils down to, in large part, the amount of time that we've been in business in the region for sure. And therefore, we think it's pretty hard to replicate from a lot of companies that may be trying to move to town and take the business in Saudi Arabia as well. But the first is, our deeply entrenched relationships. We've been in business for decades in the region. We've built the relationships with key decision makers in the IT world. You can think, if we worked with a project manager 15 years ago, they've since climbed the corporate ladder, become a director or VP of IT, maybe even a C-suite officer. They're liking the quality that they get with NTG, so they're willing to give us bigger contracts that way. But once we close the sales and win the contracts, we have to fill the butts in the seats for those contracts. And that's where we get into number 2, which is filling our talent pipeline, in large part with education and training programs. So we have decades of experience partnering with universities and colleges in Egypt, where our talent pool is based. We offer upskilling training programs, summer research programs, those kind of things to get college students and university students and new grads interested in working with NTG. But we've taken this even further in recent years. In 2023, we opened our first NTG school in Egypt. Now there are two of them operational as of now in Cairo, but basically offering a dual curriculum vocational high school experience to high school students in Egypt. Part of it is typical high school, math, science, language. Part of it is software specific, computer programming class or circuit design class, those kind of things, with all the teaching hours donated by NTG staff as well. So we're really, trying to invest in the community and let all technology-minded youth know in Egypt that NTG is a great place to work, especially if you want to work in the rapidly growing Gulf. But that plays into the third point, which is investing in decision makers in the future. We're trying to take all of this experience investing in education in Egypt and roll it out into Saudi Arabia as well. So we're trying to start up the same sort of university and college partnerships, training, who will end up being, the leaders of technology and business in the future in Saudi Arabia, give them the technology training that they need to hopefully fill back into that first bucket there and become, source of new business and relationships for us in the future. So by this point, I like to take a quick look at a case study of one of the actual projects that we're working on in Saudi Arabia right now. For this case study, we did offshore software development work for a large system integrator in Saudi Arabia. Now, these are the guys who get a lot of the government contracts, Ministry of Interior, Ministry of Tourism, those kind of contracts. But we were contracted to work on a little bit of mobile app development, a little bit of internal government system development, centering around the Hajj and Umrah pilgrimages to Mecca. If you're familiar, the Hajj is probably the largest annual gathering of people in the world. So these are big tourist operations for sure. But NTG worked in part on the visitor-facing mobile app to, you go on, you book your visit to the holy site, that kind of thing. And that played into some of the background government systems that NTG helped work on as well. You can think about it as, logistics and crowd management systems. You only want a certain number of people visiting a holy site at any given time, that kind of thing. But overall, this project definitely showcased the strength of our, number one, our relationships and our referral network, but also number two, our talent pool for sure. On the relationship side, a lot of our new business comes from word of mouth referrals from satisfied past customers. This example was no different. The CTO was the decision maker here, and he was recommended NTG by somebody in his professional network, somebody who had been working with us for years, liked the pricing, liked the quality of work, and was ready to go tell his friends about it, But also on the talent pipeline side, for this engagement specifically, we were able to really quickly, within a couple of weeks, place 10 senior resources with this customer to start the engagement off. These are the senior type architects who are going to be designing the system, building the early functionality out, getting the core systems up and running. And then over the course of about 2 years, this engagement grew to be about 200 resources, which is where it is today, probably our largest engagement as of right now. But really, in the world of Egyptian offshoring, we're probably one of the largest, if not the largest, Egypt offshore provider right now. We really are an early mover to this market. And, any sort of competitors working out of Egypt would definitely find it hard to field this many resources, especially for one single engagement for sure. So definitely shows off the strength of our talent pipeline. So all those successes in these types of projects are showing in what we see as accelerating contract wins. Definitely over the last year or so, we've been seeing our customers sign on for increasing contract sizes, for increasing contract durations. Our typical contract length, if you look back historically over the last few years, has been about 1 year. But over the last year or so, we've seen 3 key customers sign on for 3-year engagements with us. So they're upping the duration of their contract for increasingly sized engagements as well. So just a couple of highlights. Back in August, we signed our $53 million over 3-year contract. In December, there was another customer who signed on for a $22 million over 3-year contract as well. And actually, since that was signed in December, back in April and May, we saw a couple of expansions of that same December contract to the point where, instead of the first year's billing being projected at, say, 22 over 3, which is, 7 million and change, we've seen it increase by more than 50% to the point where it's billing close to 11 or $12 million over the first year now. So customers are signing on for larger contracts over longer periods of time and continuing to expand them over time as they're satisfied with the quality of work. So that's sort of the background of the contracts that go into what have been an amazing 16 quarters of last 12 months revenue growth for us. And we're continuing to solidify that backlog that we have right now. Right now, it's sitting at about $100 million in purchase orders and contracts on hand. We track a couple of other KPIs around, customer retention, customer satisfaction, that kind of thing. These ones are focused on year-end 2024. But basically, when you take a look at the customers we worked with in 2023 versus 2024, we saw a 25% increase in the absolute number of customers. So strong increase in number of customers driven in large part, as I mentioned, by a strong word of mouth referral network. Our customers and their satisfaction end up being a really good salesman for us, for sure. But when we work with these customers and onboard these customers, for that same time period, we saw a 90% customer retention rate. So we're winning new customers, we're keeping them happy, and they're choosing to continue working with us. And not only are they working with us, they're also expanding their engagements with us. So 54% of our customers over that same time period increased the size of their engagements and their contracts. And that all plays into the metric that we track around recurring and reoccurring revenue, sitting at about 85% of our revenue. Because we structure our contracts such that they're 1 year or 3 year engagements billed monthly, there is a strong recurring element to it, right? So recurring being those multi-year contracts that have explicitly been signed by our clients, but reoccurring also being for the customers who, yes, they're on 1 year terms, but they have been consistently renewing those 1 year contracts for, say, 2 years or more. I'll get into some of our finances. Definitely, the revenue growth has been the headline for our story over the last little while. I mentioned that 60% compounded annual growth rate for revenue over the last 3 years or so. Definitely 2024 was our breakout year. We saw 102% year-over-year growth in revenue for 2024 to post that $56 million revenue. And looking on into 2025 and really beyond, we're expecting growth to continue to be on the menu. Definitely in 25, that law of large numbers is going to start kicking in, and we're going to see growth more on the order of about 40%, but that still is a really strong absolute growth number, bringing us to our target revenue of $78 million. But what's definitely noteworthy of our story is we've been executing on the revenue growth, yes, but we've been doing it while doing a pretty good job of maintaining our profitability. Gross margins have, for the last few years, been pretty consistently in that range of 35 to 40% that I mentioned. That's typical of our professional services line. And we've also been posting some pretty strong adjusted EBITDA numbers. Now, for sure, in 2024, we definitely showcased the strength and scalability and profitability of our model. We posted that 22% adjusted EBITDA margin for the year. In 2025, we're guiding down slightly to about between 16 and 20%. And that's just because we expect to have to make a decent amount of investments to keep the growth going. Things like renting new office space, buying it in some cases, renovating the office space, hiring new employees, equipping them with laptops and office furniture and all that kind of thing. But overall, we are cash flow positive from operations, so we're in a pretty strong position to keep the growth engine going from here on out into the future for sure. Now, we relatively recently published our Q1 earnings, so I'll take the opportunity to just touch on those briefly. Again, Q1 2025 was a strong revenue growth quarter, revenue up 68% year over year, so continuing the revenue growth. Definitely the profitability line is one that draws some attention. Adjusted EBITDA margin for the quarter was about 15%, so just a little tad bit below that target margin of 16 to 20%. We definitely saw Q1 as an investment quarter. We saw things like an increase in our roster of employees to be rolled out with our customer in the form of G&A roster increases in Q1. We hired new salespeople to put more boots on the ground. Things like securing and renovating office space that I was mentioning before also hit us in Q1. But overall, we're expecting 2025 to have a similar profile to 2024, whereas Q1 was definitely an investment quarter. We're expecting a little bit better profitability as those new resources and that new office space begins to be productive and billable going on throughout the rest of the year as well. Talk about capitalization, key shareholders. I mentioned before we were cash flow positive from operations, continuing to show a pretty strong cash position on the balance sheet right now. To the extent there's debt on the balance sheet, it really is, extremely low interest management owned debt that was put into the business back in about 2019 when we first made the decision to pivot to this sort of software development offshoring model that we're working on right now. The effective interest rate is less than 1%. So the debt is definitely extremely cheap and favorable to the company, not constraining cash flow all that much. In terms of shares outstanding, 42.5 million shares outstanding, insider ownership about 40%. Now, caveat this by saying we did close a life offering last week that added probably about 4 million extra shares to our float. So insider ownership is probably sitting somewhere around 36% after the closing of that offering. It's just that the slide hasn't been updated just yet. But still, management owns a very large chunk of the float, and I would say, their interests are definitely in line with those of the shareholders. But I think that's a pretty good intro to NTG's story. I think I'd just finish off by saying, we've been active in the Saudi market that we're targeting right now for decades at this point. We've built the relationships we need to take advantage of all of the investment that's going on into the technology space right now. We've got the proven and profitable and scalable business model that we think we can use to go after a lot of the technology business and really become a key player in the Saudi and Middle Eastern technology space as a whole. So I think I'll stop there and I'll hand it back to you, Paul, for any questions that we have. Thanks very much.
Thank you so much, Adam. Yeah, reminder to everybody, if you got a question you'd like me to ask Adam, just use the chat function and we'll make sure that question gets asked. Adam, fantastic job with the presentation. First question I have for you is, can you give us a sense of what the sort of the more immediate addressable market is for you guys and your services within that market? How big could you be if you were to tackle the whole market?
Yeah, that's a really good question for sure. I mean, we're really excited about the growth that we're seeing in the Saudi technology market right now, and we're trying to position ourselves to really provide services to all aspects of that market. When I was talking about our offering, I was mentioning we do, software development, yes, but a lot of the other support staff, we do, DevOps work, testing and QA work, project management, product management, you name it. We're trying to really become a broad provider of these services. So from that perspective, taking a look at right now, I believe the size of the Saudi Arabian information and communications technology market is on the order of about $50 billion. And if we just posted a year of $50 million, we're a fraction of a percent, 0.1% of the overall market. I think there is an extreme, level of growth possible if we were to even go for, say, 5-10% of the total market for sure. But what's added onto that is the growth in the market too. $50 billion as of 2024, all the investment that's going into it, it's expected to reach something like 80 or even 90 billion by the 2030 mark. So growth not only within our company, but in the market as a whole is really exciting.
Awesome. Now, in your presentation, you mentioned you've got over $100 million in backlog right now. Typically, how long does it take to recognize that backlog and convert it to revenue?
Yeah, that's a really good question for sure. So what goes into the backlog primarily is, purchase orders and contracts that are on hand, the majority of which are, at least by number, those sort of one-year contracts. I think it's relatively simple to rectify that sort of book to bill when you look at, our history of contract announcements, that kind of thing. If you add up, say, the $53 million 3-year contract, the $22 million 3-year contract, and there was another about $7 million 3-year contract in there as well. You can sort of say that those 3 contracts are billable over 3 years. The balance is billable over 1 year. So you can take a look at how the backlog that way plays into that sort of 1-year time frame. But in general, by number, our contracts are typically those 1-year terms. So once we book and announce a contract, it's typically in or about that 1-year time frame that we're gonna bill at least that first year's contribution.
And how do you bill? Like, is this something where you get paid anything up front, or is it get paid? Obviously, there's a time component on it, but maybe describe how you guys get paid.
Yeah, in large part, we do, I guess to simplify it, we have whatever it is, 10, 20, 50 resources working as a team with one of our customers on a month-to-month basis. We'll submit timesheets, work reports to the customer, and they'll pay us based on that monthly rate. A lot of the times it is a negotiated monthly rate for the resources that we're providing. So we basically get a set amount that we get to bill every month.
Gotcha. And then maybe talk a little bit of potential customer concentration. Any one customer that's outsized, or is it pretty diversified?
Yeah, for sure. As of the last reporting period, it was about 70% of our revenue that came from our top five customers. But we're pretty excited about the diversification trend that we've been seeing. If you look back, it wasn't uncommon, say maybe a year and a half ago, even a couple of quarters ago, for a single customer to be 20, 25% of our revenue, maybe even 30 at some points.
Mhm.
But as of the last reporting period, there was no single customer that was more than 20% of our revenue.
Gotcha. And uh, you just announced that I think it was a $9 or $10 million financing that is closed, this life financing. Maybe give us a sense more details. How are you going to spend that money? What's the use of proceeds for that funding?
Yeah, that's a good question for sure. I mean, so we just closed what ended up being a $9 million life offering, closed it on this past Thursday as well. And the thinking behind that really is, there really is a lot of room for growth continued in the Saudi Arabian market right now. And with that comes a lot of upfront expenses I was talking about a little bit in the presentation. So, whenever we go out and we sign, one of these $53 million contracts, what's going to be required is, maybe a whole new section and a floor of office space that needs to be secured and renovated and gotten ready, office furniture, resources on the order of dozens of new employees that we're going to have to onboard and hire and train. And then, of course, the equipment, the laptops that go along with them. So all these, expenses that come along with the growth have to be covered with upfront. And, what's an important point to note about our model, I would say, is, when we sign one of these contracts, we're going to go out and start hiring resources. Sometimes we even hire before, the negotiations are finalized, so we can really hit the ground running. But in that
Mhm.
amount of time between when we hire a resource and when we're training them up and getting them ready, and when we actually place them with a customer, they're going to be sitting in our G&A and hitting our operating expenses that way. So that they need to be funded and floated up front before they become billable as well. So I think what to expect with this raise is, us getting ready for a next level or a next leg up of growth. Um, I would say that's the primary use of the proceeds. I would also caveat that, we're also earmarking something on the order of $2.5 million of debt repayment as well.
Mhm.
I mentioned that debt on the balance sheet that has been sitting for about 6 years now. And I think strengthening the balance sheet is definitely something that's on the top of our minds. Obviously, management wants to get their original investment that hasn't been accruing any interest back too. But I think a strong balance sheet in terms of, less debt, but also more cash is really going to help us prove to, especially our large enterprise customers, that we're ready to
Mhm.
take on a lot of the new contracts that we're seeing. We've even
Mhm.
had it happen relatively recently, our customers saying, you're a public company, I can just go pull up your balance sheet. It doesn't look like
Mhm.
you have the cash to fund these types of contracts. So having a little bit of extra cash, a little bit less debt on the balance sheet is going to be helpful as well.
Mhm. Mhm. A lot of investors, when they see a company operating in a foreign jurisdiction, there's a concern around payment and currency, and maybe let's talk about both those things. Receivables. Do you ever have issues with receivables? How do you fulfill or enforce any bills across jurisdiction here? And then talk about currency if there's any impact from currency fluctuations.
Yeah, that's a good question for sure. So let's talk about receivables first. We're actually in really strong shape when it comes to receivables. I know, on first glance, you can take a look at our cash flow statement and it'll show, operating cash flow before changes in working capital, 2.5 million, but only 400,000 in actual operating cash flow as of the first quarter. So it makes it look like, especially when you take a look at that accounts receivable line, it makes it look like the receivables are ballooning and maybe we're having trouble with collections and that kind of thing. But the truth is, we're actually doing really well when it comes to collections. The customers pay on time. There definitely is a lot of investment and a lot of interest in making sure that these sort of external services continue to be delivered in Saudi Arabia so that they can meet their goals. So from that perspective, we haven't had any problems with customer payments. Our average days sales outstanding for our accounts receivable sits at about 75 days, which is what we see as typical. 45, even 90 days, 45 to 90 days for an enterprise level customer. We see that as pretty typical. So we're seeing that these receivables, if you take a look just in Q1, something like 90% are billed in Q1, another 5% billed in Q4, and it really just becomes a couple of percent that are actually old, but at no risk of default. So the accounts receivable side of things is actually extremely strong, and it really is growing as a side effect of the rapid growth that we've been seeing, right? 100% year-over-year revenue growth is going to blow out the receivables to a certain extent. When it
Yeah.
comes to foreign exchange, you mentioned, definitely there's foreign exchange at play right now. Historically, it has been beneficial to us in both aspects. You can think about we quote and bill our customers in the Saudi Real typically, which is Saudi Arabia's currency. It's pegged to the US dollar. And we pay a significant proportion of our expenses, yes, in Saudi riyals, but also in Egyptian pounds to our Egyptian workforce. So historically, the past few years, there has been a decent amount of currency devaluation with the Egyptian pound. So we've been able to pick up a lot of gains on foreign exchange just with the combination factor of, we're reporting in Canadian dollars, we're billing in US dollars, which has historically been strong. And then we're paying a decent number of our expenses in Egyptian pounds, which has been devaluing a significant amount. So historically, it has been a strong tailwind for us. But in Q2, the currency situation in North America has been more volatile. So we'll definitely see a little bit of a change in that trend, let's see, as the US dollar has been weakening a little bit.
Gotcha. Talk about the competitive landscape a little bit, specifically for your services. Obviously, there's likely call it homegrown competitors, but are there other foreign companies that are coming in, kind of doing what you're doing? And if so, are they, what kind of size are they, and what's their, what do they look like?
Yeah, I would say it's interesting to see the competitive landscape over there. On the one hand, there are the sort of small shops that are more homegrown, as you say, maybe a couple of dozen guys tops out of Egypt, that kind of thing, doing their own offshore center. When it comes to actually securing contracts with these sort of large enterprise clients, those types of companies definitely have trouble. They can't field the number of resources or replace them if they quit, that kind of thing, as easily. I think we definitely have an edge on the sort of homegrown smaller shops. Definitely when it comes to those sort of homegrown shops, I think NTG is one of the biggest, if not the biggest, when it comes to Egypt. We've definitely got that sort of first mover status. But that being said, just because of the amount of investment into the Middle East right now, it's definitely drawing the attention of other foreign companies. So you start to see the multinational consulting houses move to town for sure. So, players like IBM, players like PwC, TCS definitely has a very big presence in Saudi Arabia as well. The guys from Tata. I think what those multinationals tend to bring with them is that more standard offshoring based out of India or Pakistan model. When it comes to offshoring out of Egypt, the large multinationals definitely don't have that sort of exposure or experience with it. So we find ourselves being able to win on that sort of cultural alignment aspect of things, but especially when you're talking about like the large multinational consulting houses, a lot of times we can beat them on price as well, just because, we're a smaller company, we don't have the same overhead. We can definitely afford to price things at, 70, 80% of what they're bidding as well. So we definitely get that sort of cultural benefit from those multinationals, as well as on occasion, even pricing. Yeah.
Gotcha. And then what sort of keeps you up at night? What are the challenge that sort of is front and center for you guys right now?
When it comes to challenges, for sure, we've been doing a really good job leveraging our relationships to close sales. Our customers are starting to go out and sing our praises to their friends and bring us referral-based sales as well. So the sales pipeline is strong. Probably what we have our eye on most closely is that sort of talent pipeline aspect of things. So actually fulfilling the contracts when we get them. We've been doing a really good job, I would say, getting in front of colleges and universities to really get that network growing of students that want to come work for NTG after they graduate. We've just from the fact that we've been in business for more than 20 years in Egypt and Saudi, we've started to become known as, a preferred employer, especially the local population. Like it's starting to become almost ubiquitous that, if you want to work at, a company in the Gulf, NTG is a good way to get into that. So definitely what we have our eye most closely on is recruiting, talent pipeline, filling the contracts as we get them. But we've been doing a pretty good job keeping up with filling that talent pool for sure.
Fantastic. Adam, we've got a handful of questions. Why don't we jump on some of these and get through them as we can? Got a question from Hassan that says, okay, sorry, what's your thoughts on the sharp decline of the Egyptian currency over the years? Does it affect you? I mean, you've mentioned that, but maybe your feet on the street type of view is this where do you think the currency goes over the next little while?
Yeah, I would expect a little bit of stability over the next little while. Like there definitely were, um, if you see really over the last year and a half, that one big spike, I think it was in March of last year or something like that, in terms of devaluation, that was a result of basically Egypt letting its currency float, right, as a part of a new deal that was struck with, I think, some of the other Gulf nations. So I think it was almost like a ripping of the Band-Aid off situation. And we're hoping that, there will be a little bit more stability on the Egyptian front going on into the future as well. I mean, you definitely see the impacts on us as a business. In the past, Egypt has been a pretty significant proportion of our revenue. It wasn't too long ago where Saudi Arabia was. Yes, it could have been 80, 70%, but go back a little further, 50% of our revenue, that kind of thing. And Egypt could have been 20, 30% of our revenue as well. Recently, Egypt, in the last reporting period, has been closer to 2%. Definitely an economic slowdown there. Not a lot of projects to be bid on. And if there are projects, just because of the currency value, the relative value of those projects isn't very high either. So that being said, that's the thinking basically is just because the economic situation in Egypt has been a little turbulent recently, we would focus on still being present in Egypt, but more being an employer and a delivery center in Egypt, working for customers in Saudi Arabia where the economy is definitely more active, I would say. But that being said, when I've been in Egypt, at least recently, it definitely things seems like things are at least showing signs of turning around. There's a lot of new development and construction going on. It definitely seems to be more of an exciting place recently. So we're hopeful that over the medium to long term, things will pick up there and we'd be able to get some more business there as well.
I mean, do you guys look outside of your current markets right now? Would you go into some of the other countries in the area?
That's a good question for sure. So, when we take a look at our Egypt model right now, we think that it's basically tailor-made to service the Saudi Arabian market. It's lower cost. It's a strong technical center in the region. Like it really is a great idea to service Saudi Arabia from Egypt. But that being said, I think the neighboring Gulf nations are equally well served by that same model. So I think some expansion into some of the other geographical locations, Kuwait, Qatar, Oman, I believe all have similar Vision 2030 style initiatives that are looking to technologize their economies right now. And they're all in similar situations. They've got primarily natural resource money that they're looking to invest in diversifying their economy. So we've got some operations already set up in some other countries. Saudi Arabia is 95% of our revenue. It definitely is the largest economy in the region and growing rapidly and is going to be our number one priority to focus on. But we also have operations in Oman to the south of Saudi Arabia and Iraq up in the north. Both are in similar situations where they're looking to modernize and digitize, and they've got that oil money to invest into it. So they each provide about 1 or 2% of NTG's revenue at this time. So we're taking a look at the opportunities to expand into those neighboring states organically, like we have been doing. But I think one other use of the proceeds from this most recent raise is going to be starting to be more strategic about mergers and acquisitions in the region. So, our thinking is it's probably like this everywhere in the world, but definitely in the Middle East, relationships and track record and who you know is most important. So if we were able to, find a company that's like NTG was a few years ago, who has the track record, but maybe low valuation, to be able to roll them up, pick up their customers that they have a long track record with and be able to serve them with the Egypt Offshore Center, I think that would be a really exciting opportunity. So it's something that we're going to probably take a closer look at now that we have some of the funds from the recent LIFE offering for sure.
Fantastic. Okay, Russell asks, where do you see NCI in 5 years? What's the end game here? Is there an end game?
Yeah, I would say the end game is to keep doing what we're doing, really. I think there is such an amazing opportunity to continue growth in Saudi Arabia, and we've basically been spending 20 years getting ready for this at this point. I think our number one priority is to continue to take as much of the market share of the IT services market in Saudi Arabia as we possibly can. And, the primary intention really is to see this grow and potentially even become, a multinational IT consulting house as well. Yeah.
Now you've mentioned what the use of proceeds are going to be on this financing here, but do you foresee a need potentially for another tapping of the equity markets? Is this something that the more you grow, the more capital you might need down the road?
Hmm. So there are a couple of different ways that we think about that. I mentioned when we were talking about our finances that we are cash flow positive from
Mhm.
operations. So at least when it comes to the sort of organic growth that we've been seeing, we're pretty well capitalized to continue to expand on that. So that being said, we're not the type of company that goes and raises money and then has some crazy burn rate and it's going to have to go tap the markets
Mhm.
again sometime soon. But that being said, we do primarily describe ourselves, as, at least right now, as a growth story, right? So if there's a contract like another $53 million contract that we want to
Mhm.
go after, that maybe needs some strengthening of the balance sheet to go and secure. There's the possibility for needing to tap the markets in that case. Again, if there's going to be an accretive M&A deal that we think could be acted upon as well. I think it really just depends on what the projects are in front of us and what we think that the returns are going to be. But
Mhm.
at the end of the day, management owns a third of the float, even more than a third of the float. They don't want to
Mhm.
dilute themselves any more than absolutely necessary for sure. So
Mhm.
it really has to be a case of, we're comfortable funding operations just with cash flow. Are there any projects above and beyond that we can invest in? That's really the question that we're going to be asking when we look at tapping the market.
Mhm.
So as of right now, no plans, but
Mhm.
as the opportunities arise, we're continuing to
You never know.
reassess.
Yeah. As far as this financing here, who participated in the financing? Was it institutionally based? Was it mostly retail? Any names you might be able to mention?
That's a good question for sure. When we were looking out back at the raise that we did last September,
Mhm.
which in retrospect definitely was working up towards, funding that $53 million contract that we had just signed, in large part. It was more or less entirely retail based, at that
Mhm.
point, which was understandable. We were still a relatively small company, new to the capital markets world for sure. What was exciting about this most recent raise that we did is that it was the vast majority of it was institutions as well. So we're starting to be able to make the introductions and the connections with the institutional investment world and starting to catch their eye as an opportunity to invest. So definitely there are a lot of strong institutional names that we were able to add to the register who are going to hold the story for the long term and are excited to be shareholders as well.
Mhm. Adam, a question from Daniel who asks, how much is AI currently affecting your business, and how do you see it affecting it in the near future? What is your strategy in that area?
Mhm. That's a really good question. AI is definitely on top of everybody's
Hmm.
minds these days, especially when it comes to technology for sure. So I would say our position on AI as it is right now is we definitely see it as an opportunity for our business. I know there are a lot of, strong headlines being floated about how, it's going to be the end of software development as we know it, or those kind of things. We've been trying to stay on top of testing a lot of the tools that are out on the market for around artificial intelligence, software development, that kind of thing. And the way that we see it right now is it's not yet, and probably not anytime soon, going to completely make redundant our own software development outsourcing offering. But what it can do is, offer a productivity boost for the resources that we employ right now. So I'm sure you've seen all the different types of Copilot, Cursor tools that
Hmm.
can help with software development, but those kind of tools that can help increase developer productivity, I think would be really helpful for our core offering because companies are going to want to work with the most productive developers they want. So staying on top of the trends and making sure that our employees are using the latest and greatest tools to the extent that they can is probably priority number one. But we're also trying to get into the AI solution space as well. So we actually have our own internal artificial intelligence department that's working on, especially with our proprietary software product, integrating AI capabilities into that. So we're working on a couple of pilot projects right now. One is working with one of our financial services customers to basically have an M&A screening bot, I guess you can call it. You can feed in potential targets, their financial statements, it'll crunch
Hmm.
ratios, make recommendations, that kind of thing for one of our customers. We're also using a pilot project internally to basically train a chatbot up on uh, historical NTG sales data to help account managers know how to scope out and price out projects with new customers, that kind of thing. So we're trying to see where we can make AI fit in all these different types of our workflows as well. So really seeing it as an opportunity to increase our own internal productivity, open new product lines, and really help our customers get more bang for their buck when it comes to software development resources as well.
Fantastic. Okay, next question is from Hassan. Hassan says, Saudi telecom company just won an $8.5 billion contract. Do you aim to compete for big contracts like this?
Uh, okay, so that's probably a good question. I think we're referring to the Saudi telecom company's solutions arm. I think that was the contract that we're talking about. I think there's different ways to look at it. Like, the Saudi telecom company has been a customer of ours for probably going on 2 decades now, maybe even longer. So we work directly with the Saudi telecom company and their sort of system integrator arm, which is STC Solutions. So to the extent that we're working with them, especially when we're working with system integrators, it really takes the form of partnership models. A lot of the times, system integrators will win contracts, especially through government organizations, because a lot of the times the government, they'd want to give work to Saudi companies. They don't necessarily want to give work to foreign companies. But these system integrators will win business and then need to augment their own teams with resources from companies like NTG. So we're able to work on partnership models that way with a lot of system integrators. So I would say when it comes to Saudi national system integrators, it's almost like if you see headlines of them winning big contracts, it's good for NTG because a lot of the times we have partnerships and are staffing a decent number of the resources on projects like that as well.
Hmm. Fantastic. Okay, so last question from Hassan. He says, do you worry about government regulations? How regulated is the environment you work in?
That's a good question. I mean, there's different aspects to it. I mean,
Mm,
in large part, it is pretty much live and let live when it comes to business in Saudi Arabia to a large extent. There are other aspects when it comes to that people might not even think about when it comes to doing business in Saudi Arabia, like you need to have a certain number of Saudi nationals working for your company and things like
mm,
that that we take care of. But would say by and large, it is the framework that Saudi Arabia is approaching business with it right now is they want to attract as much international talent as possible to come and build up the nation. And they're making it pretty easy for companies to come and set up shop, move their regional headquarters into the region, and begin servicing the market. So yeah, I would say overall it is relatively smooth sailing when it comes to a
mm,
regulatory standpoint.
mhm. Perfect. Good to know. Adam, as investors watching the business, what do you think are the most important sort of catalysts or maybe metrics to really pay attention to understand that things are going in the right direction?
That's a good question for sure. I mean, taking a look at our PO and contract backlog, I think is a really good indicator. If I were to look at our backlog back in, let's say the end of 23, early 24, it was probably something on the order of $20 million. And since then, the backlog's grown to $100 million. Now, granted, it's probably not apples to apples as there weren't any 3-year contracts included in it back then, but still stripping out those contributions, we're still seeing really great growth in our backlog numbers as well. Looking for catalysts going on into the future, I would say a large part of our growth comes from having these relationships with these really big customers and taking more and more of their IT budgets. So you're seeing things like that $22 million contract that we saw back in December be expanded. I believe it was twice over the last couple of months, right? So increasing in size by 50% or more after the contract is already signed. So just continuing to watch out for those. It's pretty much once every month or once every 2 months we put out press releases talking about the purchase orders that we've gotten and the contracts that we've signed recently. But taking a look and seeing, those existing customers that we have, how much are they increasing their spend? Because, we're working with really blue chip, large enterprise customers. Like our telecom customers are the Saudi equivalents of Bell and Rogers, right? The big five banks as well are our customers in Saudi Arabia. They have really a huge appetite for technology. So we're really excited to be able to work with them and grow our own offering along with them as well. So keeping an eye on the backlog, keeping an eye on how satisfied our customers are and how eager they are to expand the contracts, I think is definitely something to watch out for.
Mhm. Awesome. This has been great. It's been extremely helpful. Always good to sort of get this type of update. But Is there anything you think we missed, or is any, if we didn't miss anything, what's the key message you want to make sure everybody walks away with today?
Yeah, I think you covered a lot of good ground for sure. I don't think there's anything glaring that stood out in terms of what we missed. But if I were to just summarize the key points again, I think NTG is unique in a couple of ways, right? You know, we're Canadian listed. We've got a Canadian board of directors and a Canadian auditor, but we're doing 95% of our business in Saudi Arabia, which happens to be, you know, one of the fastest growing technology markets in the world. So if you're really looking to diversify, get some exposure to you know, maybe emerging markets that are, you know, growing fast and seeing a lot of investment put behind them. I think NTG really is a pure play on a lot of, especially this growth in the Middle East. And you know, yes, there are North American and worldwide tech companies that are trying to get in on the action, but when it comes to the sheer growth potential, I think NTG really is a strong offering. And that being said, you know, like I mentioned, we've been in business for 20 years. We're cash flow positive from operations. We've got a profitable, scalable business model that we're looking to take as much of the growth possibility as possible at. So I think yeah, that's what I'll leave. That's what I'll leave you with for sure.
Very good job. We've been speaking with Adam Zaghloul of NTG Clarity Network, symbols NCI in the Venture Exchange and NYWKF on the OTC. Adam, it was great to catch up and certainly look forward to keeping apprised and catching up in the near future.
All right, this has been great. Thanks very much, Paul. I appreciate you having me on.
Appreciate it as well. And we'll say bye for now. Thank you and bye for
Take
now.
care.